Hi dear children, I am Rakhi, PGT Economics. Today we will continue about the national income accounting. Last classes we studied certain national income accounting problems. Okay, now we'll study about the private income, personal income and personal disposable income. Means how to calculate private income, personal income and personal disposable income. Okay, first we will study about the private income. Okay. How to calculate the private income means the income from domestic product accruing to the private sector plus NFIA, that is net factor income from abroad, plus national debt interest plus current transfer from the government plus net current transfer from rest of the world Okay. So by adding all these 5 terms, we will get the private income. That is income from domestic product accruing to the private sector plus net factor income from abroad plus national debt interest plus current transfer from the government plus net current transfer from the rest of the world. Okay, income from domestic product accruing to the private sector. It means the domestic income of the private sector only, not including which sector? Government sector. Okay, next one is net factor income from abroad. That we last classes already studied how to find out net factor income from abroad. That is factor income from abroad minus factor income to abroad. Okay, factor income means it is the income of the factors of production. Which are the factors of production? Land, labor, capital, organizer. These are the factors of production. So the factor income of the factors of production means rent, wage, interest and profit. Okay. So net factor income from abroad plus national debt interest. National debt interest means the government taking loan from the private people in order to meet the additional expenses or additional expenditure. For that, the government have to give interest for the debt. That is what national debt interest. Next one is current transfer from the government. Current transfer from the government means the government is giving transfer income to the people in the form of subsidies, likewise unemployment allowances. So that is what current transfer from the government. Next one is net current transfer from the rest of the world. Means from abroad also we are getting what? Remittances, gift. That is transfer income. That is one-way income. We no need to give back the income. That type of income is transfer income. So from the abroad also we are getting transfer income. That is net current transfer from the rest of the world. So how to find out the private income? That formula is income from domestic product accruing to the private sector plus net factor income from abroad plus next one national debt interest plus current transfer from the government plus net current transfer from the rest of the world. This formula you have to study to find out the private income. Okay, you can write down this formula. This is related to the national income accounting topic. National income and related aggregates. Okay, so how to calculate the private income? This formula you have to apply. Please write down this. Okay, now we'll solve the private income. First problem, that is calculate the private income. Here the available data is net domestic product at factor cost. Net domestic product at factor cost means NDP at FC. It means domestic income. Domestic income of the private sector is 1200 crore. Next one, domestic income of the government sector is 400 crore. Next one, net current transfer from the rest of the world 200 crore. All these are crores only. Next one, current transfer from the government 100 crore. Interest on national debt 500 crore. And net factory income from abroad 50 crore. Okay, now you have to apply the equations. Okay, how to calculate the private income? The formula is income from domestic product accruing to the private sector plus NFIA, that is the net factory income from abroad plus national debt interest plus current transfer from the government plus net current transfer from the rest of the world. So 5 times you have to add to find out the private income. And from this available data, all these are available. Okay, that is income from domestic product accruing to the private sector. Private sector only you have to add. So 1200 plus government sector you should not include, because here we have to calculate the private income. So we have to avoid the government sector income, should not include. Then you will ask the question why this data, the government sector income is given. It is just for giving confusion. Okay, you have to study the formula properly and you have to apply that and you have to find out the answer. Okay, so first one, net domestic product at factor cost of the private sector, that is income from domestic product accruing to the private sector, that is how much, 1200 crore plus next one is NFIA, that is net factor income from abroad. Net factor income from abroad is 50 crore. 50 plus next one is current transfer from the government. Current transfer from the government, you have to see current transfer from the government is 100 crore plus next one is net current transfer from the rest of the world. Net current transfer from the rest of the world is 200. Then anything left? National debt interest. National debt interest. You have to see net current transfer from the world. Okay, interest on national debt, that is 500 crore. Okay, you have to add this. What are the data is available and in that government sector is means you have to exclude that. Then you have to apply the formula. All it is available in the data directly, because net domestic product factor cost private sector, that is private sector income from domestic income. Private sector domestic income, it is given 1200 crore plus likewise next one is what, current transfer from the net factor income from abroad 50 crore. Next one is current transfer from the government 100 crore and net current transfer from the rest of the world is 200 crore. Likewise, national debt interest, that only same, interest on national debt 500. You have to add all this. Okay, that is 1200 plus 50 plus 100 plus 200 plus 500. Okay, the answer is 2050 crore. This is the private income. Okay, so you have to study the formula to find out the private income. It is very easy. If you study the formula, it is directly given in the available data. You just apply it and you will get the answer. Clear, no? Next, we will study about how to calculate the personal income. Personal income. The formula is private income minus corporate tax minus retained earnings. Okay, we already studied how to find out the private income. How to find out the private income means the income from domestic product accruing to the private sector plus net factor income from abroad plus national debt interest plus current transfer from the government plus net current transfer from the rest of the world. Okay, from the private income you have to deduct corporate tax. Corporate tax means it is the tax given to the government by the private enterprises. Means it is the business taxes made by the private enterprises to the government. So you have to deduct from the private income to find out the personal income. Which one you have to deduct? Corporate tax. Means the private income minus corporate tax. One more thing you have to deduct, that is minus retained earnings. Retained earnings means it is a savings of the private sector to meet the unexpected events in future or future expansion. the private sector make savings. That is not a part of the personal income. So you have to deduct retained earnings and corporate tax from the private income to find out the personal income. So the formula to find out the personal income is, that is private income minus corporate tax minus retained earnings. Okay, now we'll solve one problem. Okay, here you have to calculate the personal income, and the available data is private income equal to 4,000 crore and corporation tax 300 crore and retained earnings 500 crore. Okay, and already we studied the equation to find out the personal income, that is private income minus corporate tax minus retained earnings. Okay, so personal income equal to, again you have to write down this formula once again, that is private income minus corporate tax minus retained earnings. Private income minus corporate tax minus retained earnings. Because the formula you will get a separate mark, so you have to study the formula. Any problem you are solving means also first you have to write the formula, then you have to apply the numbers. Okay, so personal income means private income minus corporate tax minus retained earnings. Okay, here private income directly given, how much? 4,000 crore plus, sorry, minus, how much the corporate tax? Corporate tax you have to deduct. How much the corporate tax? 300 crore minus retained earnings, that you have to deduct, that is 500 crore. How much is the answer? 4,500, 300 minus only. So 800, 3,200 crore. 3,200 crore is the answer. So the formula to find out the personal income is private income minus corporate tax, that is business taxes minus retained earnings. Sometimes instead of corporate tax, the available data they are giving business taxes, same only. Okay, and retained earnings also sometimes they will give a savings of the private sector. Savings of the private sector means what? Retained earnings only. So how to calculate the personal income? Private income minus corporate tax minus retained earnings. Okay, here private income 4,000 minus corporate tax 300 and retained earnings 500. You will get the answer 3,200 crore. This is the answer. Okay, clear? Next we will study about the personal disposable income. We studied the private income, personal income. Next we will study about the personal disposable income. Personal disposable income. The formula to find out the personal disposable income is personal income minus personal taxes means direct taxes. Personal taxes means direct taxes minus miscellaneous receipt of the government. So the formula to find out the personal disposable income is personal income minus personal taxes. Personal taxes means it is direct tax made by the people to the government. That is income tax, wealth tax, house tax. These are the direct taxes. So from the personal income, personal taxes have to deduct. Means direct tax have to deduct. Likewise, miscellaneous receipt of the government means the people giving fines, penalties, fees like that to the government. That is a miscellaneous receipt of the government. That also you have to deduct to find out the personal disposable income. So the formula to find out the personal disposable income is personal income minus personal taxes, that is direct taxes minus miscellaneous receipt of the government. What is the personal disposable income? Means the spending part of the income. How much income is available to the people for spending after deducting what? Taxes. Personal taxes means direct taxes. Likewise, after deducting the fees, fines, penalties that was given to the government, it means miscellaneous receipt of the government also you have to deduct from the personal income. Then you will get a personal disposable income. Okay, here the question is calculate the personal disposable income. Whatever data is available, private income 7,000 crore, business taxes 400 crore, and miscellaneous receipt to the government 150 crore, and personal direct tax 200 crore, and savings of private sector 75 crore. And we know the formula to find the personal disposable income. That is, personal disposable income is equal to personal income minus personal taxes. That is, direct tax minus miscellaneous receipt of the government. Okay. Here, personal income is directly not given. Instead of that, they are given what? Private income. So, first of all, you have to find out the personal income. Then you can find out the personal disposable income. So, personal income formula we already studied. What is the formula? Personal income means private income minus corporate tax minus retained earnings. Okay, private income already given how much? 700 crore. Sorry, 7,000 crore. Private income 7,000 crore minus corporate tax. I already told the corporate tax. Sometimes instead of corporate tax, they given what? A business tax. How much is the business tax? 400 crore minus retained earnings. The other name of retained earnings is savings of private sector. How much is the savings of private sector? 75 crore. Okay. We'll find out the personal income, that is 7,000 minus 400 minus 75. $6,525. 6,525 crore. That is the personal income. Now we have to find out the personal disposable income, because our question is calculate the personal disposable income. So personal disposable income, what is the formula? We already studied. Personal income minus personal taxes, that is direct tax minus miscellaneous receipt of the government. So personal disposable income is equal to personal income. We already find out how much is the personal income? 6,525 crore. So personal income minus personal taxes, that is direct taxes. Personal direct tax here directly given, that is 200 crore. 200 minus miscellaneous receipt of the government. Personal income minus personal taxes, that is direct tax minus miscellaneous receipt of the government. Here miscellaneous receipt of the government also directly given, that is 150 crore. What is the answer? You have to find out. The answer is this 6,175 crore. So personal disposable income, how to find out means personal income minus personal taxes minus miscellaneous receipt of the government. Here personal income we got 6,525 minus, and personal taxes 200 minus miscellaneous receipt of the government 150. By applying this, we got the answer 6,175 crore. I think all of you understood. Next, we have to study how to find out the net national disposable income. Net national disposable income. The formula to find out the net national disposable income is national income plus net current transfer from rest of the world plus net indirect tax. This is the formula to find out the net national disposable income. Suppose the question paper they are asking gross national disposable income means you already know how to make net to gross. How to make net to gross? You have to add depreciation. Depreciation other name is consumption of fixed capital. Sometimes in the data they directly given depreciation. Sometimes instead of that they given consumption of fixed capital. Consumption of fixed capital means depreciation. So net national disposable income, the formula is national income plus net current transfer from the rest of the world plus net indirect tax. How to find out the net indirect tax? You know that is indirect tax minus subsidy. And net current transfer from the rest of the world means from abroad we are getting what? Gift, subsidies, that all we are getting, remittances. So that is what net current transfer from the rest of the world. Okay. So national income plus net current transfer from the rest of the world plus net indirect tax. That is a formula to find out the net national disposable income. Okay, here the question is calculate the gross national disposable income. So you have to write the formula related to net national disposable income plus depreciation. You will get what? Gross national disposable income. So you have to write the formula first, that is how to find out the gross national disposable income is equal to net national disposable income plus depreciation, that is consumption of fixed capital. Consumption of fixed capital. It is same only depreciation. Okay. Here, how to find out the net national disposable income, that we already studied. That is national income plus net current transfer from the rest of the world plus net indirect tax. Okay, national income how much? 2000 crore plus next one is net current transfer from the rest of the world. How much that net current transfer from the rest of the world is 200 crore plus next one is net indirect tax. Net indirect tax here directly given. Sometimes they given indirect tax and subsidy separate. Then how to find out net indirect tax? Indirect tax minus subsidy. So net indirect tax here directly they given. So net indirect tax equal to 250 crore. 250. By adding you will get what? Net national disposable income. That is national income plus net current transfer from the rest of the world plus net indirect tax. Okay. Then you have to make it gross national disposable income. You have to add depreciation. That already I wrote the formula. Depreciation here not given. Instead of that they given consumption of fixed capital. Same only depreciation. So the consumption of fixed capital is 100. Okay. Now you have to find out the answer. 2000 plus 200 plus 250 plus 100. The answer is 2550 crore. Okay, all of you understood? I think today's class also you understand. So today we studied national disposable income, gross national disposable income, how to find out the private income, and personal disposable income. How to find out the private income we studied. I think all of you understood that all problems and you can practice this. You can write down the notes. If you like and understand my classes, please like and subscribe my channel, Economic Mall. Thank you.